Hello everyone, and welcome back to our Market Alert video for today, which is December 5, 2025. And I hope this video finds you healthy, wealthy, and wise. I am Ken Murray, the founder and CEO of Retirement Planners of America. And we have a ton to talk about as we go into our weekly excursion into the land of personal finance. First of all, we're going to talk about three surprises that we got this week: jobless claims, CPI, and consumer confidence. All three of those came in not what people expected. So therefore, how is that going to impact your retirement planning? How's that going to impact the Fed with all their, are they going to lower interest rates or not? We're going to go over all of that. And of course, we are on AI bubble watch. And so we're going to discuss where we think we are in this ever-expanding bubble in the AI world and what to do about it. So we're going to talk about that. So we have a ton to talk about. But before we do that, I just want to tell you that we would love for you to come in and visit with us. If anything during this video engages with you, please go to our website. It's rpoa.com. Click on Meet with an Advisor, and if you do, we'll schedule a time to visit with you. We'll build your retirement plan with you if you're retired or retiring soon, and we'll do it at no charge or obligation. And if you like what you see and you want to work with us, fantastic. And if not, that's fine too. Okay? So go to our website. It's rpoa.com. Okay, let's get started.
Retirement Planners of America, RPOA.com.
So let me bring in Jordan, our Chief Investment Officer. Jordan, we had a little bit of a controversy before we went on air, I'll say.
Sure.
Where I think you are completely wrong. So my favorite Thanksgiving, part of the Thanksgiving dinner is the canned cranberry. I love that, but I never say it out loud because, my wife spends like 17 days making Thanksgiving dinner, and I don't want to tell her that, honey, everything you made is fantastic, but that canned ocean spray, mwah.
You just want to go to Kroger and pick up the can, and that's it. That's all you need.
Easy, man. You just pop that puppy. But you don't agree with that.
That's terrible.
It's not terrible.
It's a polarizing thing.
It's not polarizing at all.
If you ever join me at my house, just know you're going to have to put in a special request.
Okay, so
otherwise it's not coming in.
So what's better than cranberries? Nothing.
Well, first of all, everyone knows the side dishes are better than the main course in Thanksgiving. Right?
Okay, all right.
But of those, mashed potatoes, without question.
Mashed potatoes?
Mashed potatoes.
Do you like them with the skin in it, like the like chunky style, or just all frappe?
I'm an equal opportunity eater. First of all, I like them all.
Yeah.
But generally speaking, with Thanksgiving, we're going to go ahead and take the skin off, nice and silky, lots of butter, lots of cream, delicious.
All right. Well, ladies and gentlemen, please vote and tell him that he's wrong about the mashed potatoes and I'm right about the cranberries. I guarantee you it's going to be 10-1. Cranberries win over mashed potatoes. Okay. Anyway, let's go. Let's have more fun than a human being should be allowed to have when talking about all this boring financial stuff. And so we have, I have an announcement before we get going. Okay, I want to invite everybody on Tuesday. We're going to have part 1 of our podcast of the 10 strategies to save or make you thousands, maybe, of dollars. Okay, but they expire before year end, so you have to act on that. So we're going to have part 1 on Tuesday, and we're going to have part 2 on Wednesday. And then on Thursday, we're going to post the RMDs. So for those of you who have inherited IRAs, the law changed this year very quietly with no fanfare. And if you don't abide by that, there's a 25% penalty. So we're going to publish that one on Thursday. Okay? So we have part 1 and part 2, Tuesday, Wednesday, of the 10 strategies. With actually, I'll just say right now, there is a bonus. Just saying. So make sure you watch. And then, of course, on Thursday, the required minimum distribution on inherited IRAs. So if you inherited one, you got to watch that. Okay, so just an announcement there. Okay, so let's talk about the big events that happened this week, Jordan. We had jobless claims.
Yeah.
So jobless claims. So this is where people are filing for unemployment. Mm-hmm. So this number, you want it to be as low as possible, right? You want nobody to be filing for jobless claims.
That's right. Now, there's always going to be a balance because you're never going to be that number at zero.
Right.
Right. But there is a normal cadence, and that's usually a couple 100,000 and change. And the Fed has been very worried, and the market as a whole is starting to look at labor weakness for a while.
They've been hyperventilating about the jobs for like months.
That's right.
now.
And all of a sudden, now we've talked about how good a barometer any jobs data is. However, jobless claims fell precipitously. The lowest level we've seen almost all year, certainly in months.
Right, and at first when I saw that, I was like, oh, wait, that's bad news. Jobless claims fell. But no, that's good news.
That's good news.
We don't want jobless claims to go up.
That's right. That means maybe, we're not having layoffs. We're seeing maybe a little bit of hiring coming back online as kind of broader economic outlook. We're getting a better picture of things. So good news. Good news there.
Good news there.
Yep.
Although we've always said that jobs do not drive the stock market. But I guess you could say indirectly they do, because if people are losing their jobs, they're not spending, and therefore profits, et cetera.
Right.
But it is profits, first of all. You could have an economy with no jobs and lots of profits, and the stock market would go up. So, okay, so let's talk about the other thing, very important, right, which is CPI, the inflation number.
And then this is, again, we've talked about this all year, is we see CPI right in line with expectations. So again, this is probably good at this point with CPI. You don't want it to be obviously higher and forecast that, broader tariffs or inflationary environments coming back in.
Tariffs have not.
We've not seen.
Where's the meat?
We've not seen anything yet. Again,
right? I mean,
and I don't know how long we can keep saying, but wait, and let's see. At some point, we got to say it just didn't have a bad effect. And even Besant has talked about this recently, that he's even been surprised because he's going back and forth. They're like, look, he thought there could be some sort of effect here, but so far, nothing.
Now, I tell you, I may stir the pot here, but Trump has talked about putting out a $2,000 tariff dividend to everybody. I'm not in that camp. I'm not, because that's kind of what Biden did, right, during COVID, where he got in a helicopter and threw money out at everybody, and that's why we got all that inflation.
Yep.
So if we're going to write $2,000 checks to everybody, that could be inflationary. I'd rather see paying down the debt with that money.
Completely.
Our
agree.
debt is going crazy, and let's use that money for paying down the debt. So that potentially could be inflationary if he gets that. But he may be just saying that right now, but it
is
doesn't
interesting.
happen.
I mean, if you just think about it, I agree with you actually, because if you're giving money to people that it's not theirs, so you're giving government money, that allows them to spend money and drive demand, again, on limited supply, which pushes prices up. So I think I'm with you there. I hope that one does not go through.
And you add to that the bigger tax refunds than people maybe are anticipating due to the One Big Beautiful Bill.
Yep.
So they're going to get a bigger tax refund and $2,000 bucks. And they're talking about, well, they're going to save it. No, this is America. We don't save. We go spend, baby. And if we spend, like you said, if there's a limited supply and lots of dollars chasing that, inflation follows.
Correct.
So I am concerned about that, but we'll wait and see.
Wait and see.
All right, so the other thing we saw this week was consumer confidence. Tell us about that.
So consumer confidence, I mean, is one of the, and there are different surveys here, but it's basically just saying the average person, how are they feeling about the state of affairs, the economy, the jobs, and it's been low, very low all year. Right, so everybody's been worried. It's a wall of worry, and what that does is cause people to hold back on spending, on putting money to work in the market, on buying houses, all these things. And finally, we've seen a big uptick, best reading in months, and that is a good thing, because if you start seeing people that get more optimistic, dollars start being spent again and money moves.
I can't figure the consumer out. I mean, it's like one day they're confident, the next day they're not. And when they're not confident, they're supposed to not spend. And then we find out on Black Monday that it's the biggest shopping day in the history of mankind. Yeah. And so it's like all these depressed people who have no confidence suddenly switch to becoming confident and buying everything they can possibly buy.
Right. It's hard to track. And so this is a data point. And so we'd want to see this to kind of trend upward, not just jump in 1 month. But if we can start seeing a couple good prints here, that does typically forebode good things in the broader economy and in the market.
Yeah, I kind of think of it as a mosaic, as a it's a painting that everything kind of gives you a directional feel for where things are going. And right now, if you look at jobless claims, inflation data, and consumer confidence, they seem to paint a positive picture.
right? That we might have had slowing growth here, but broadly, the economy is still moving forward.
So, one of the things that I've always believed is that if you're rolling along too well, make sure you're not rolling downhill. And so right now I'm thinking, okay, to myself, what could possibly be the fly in the ointment of all of this stuff? And so let me bring my prop into this.
Okay.
So I want to introduce everybody to our bubble.
Okay. All right.
So this right here is the AI bubble. And right now, this isn't very big. If we pop this sucker right now, it probably would cause a little bit of a jolt, but
Right.
not too bad.
Not overly inflated.
Yeah.
That thing could grow bigger.
It could get a lot bigger. We could pump this one up, and it probably could get, I don't know, maybe twice as big before it popped.
Yep.
So we've got this AI bubble going on, right? And we're on AI bubble watch.
Sure.
And thank goodness we have our sales strategy to help us. If the market goes down significantly, our strategy will, like it did in 2008, or actually November of 07,
Yep.
tell us to sell and protect, right? Go into protection mode. But let's talk about that, right? We continue to see the Mag 7, the technology stocks. They're a large part of the stock market, just like with the technology stocks
Yes.
back in Y2K.
Yep.
And the old thing is, if you don't learn from history, you're doomed to repeat it.
Right.
And so this has a lot of parallels.
A lot of parallels. The good thing is I think we've read and the market as a whole has read a lot about the bubble potentially. So hopefully there's positioning outside of that. But that thing can grow bigger. I think right now, to me, we're still in early stages.
Yeah, if you look at the other infrastructure builds that ended up being big bubbles that burst, like the railroads and like the internet, it wasn't until they were built out,
Yes.
and then the realization came that nobody knew how to use the railroads. So while the railroads were being built,
Yep.
the railroad stocks were going through the roof because, man, this is incredible. This is going to change everything. It's going to facilitate, shipping stuff across the country at such low prices, and it's going to create activity. Cities or towns are going to be built along the railroads, and then
Right.
they finish the railroads, and it's like, okay, nobody knows how to build railroad cars at this point, and nobody knows how to transport food in refrigerated cars at this point, and nobody's built these villages that everybody said was going to be
Yeah.
built. And so those stocks crashed, and the internet did the same thing.
Yes.
Right? As they built out the internet, it was like, okay, this internet is going to do the same thing. It's going to enable us to, sell stuff quickly, and it's going to be on people's phones, blah, blah, blah. But nobody knew how to do it until Bezos showed the way. So those stocks crashed.
Yes.
And that gap between when the infrastructure is built and the usage happens, that gap is where the crash comes.
Yes.
And right now, I would say that we are, I don't know, how far would you say we are from this AI infrastructure being built and the enthusiasm behind it to continue?
There's a number of things can stop this, but if you just say, okay, where are we, percentile of how much battery life do we have left before people really start saying, is there an end user to this? Can we actually put this to use? All these things. I think we're probably 20% into this.
Yeah, there are signs though. Microsoft
Absolutely.
came out and said that the use cases, people are trying to use it and they're not figuring out how to use it.
Which is good news actually, because if we can start in the early side, getting somebody on the other side saying, okay, it's not working early. We didn't have that in Y2K. It was just full go. And we think this will create. If we already start getting some feedback loops early on in the cycle that maybe we don't know how to do this, maybe we should slow down our spending and do some test cases here, that can help where that thing is not going to get too big.
Yeah. I, as an experiment, I asked, because the podcast that we're going to release on Thursday, which is on the new tax law. They've changed, by the way, they've changed the required minimum distribution tax law 9 times since they published it. Confused the heck out of everybody. And so this last one was supposed to clarify it. And basically, you got to watch that. If you inherited an IRA, you got to watch it because there is a 25% penalty if you don't do it. But I read the regs. I kind of got comfortable with what they are. And then I asked 3 of the big AI things you have right now, right? The one from Google, the one from Elon Musk, and the one from Sam Altman, right? I asked all 3 of them.
Yep.
What do you think is the law? They gave me 3 different answers.
Yeah, wow.
Right? 3 different answers. And so it's kind of like you're talking to a teenager and asking them their opinion. You know, it's like, so you can't trust it. So I don't know that all this excitement about AI is going to eliminate every job and kill all of us is actually going to come to fruition anytime soon because we can't trust it.
Right.
And if we can't trust it, I'm not going to adopt it if something really important needs to be done. I'm going to talk to somebody who has experience, who knows this stuff. I'm not going to just go online and say, what's the new law on RMD? And then go to a different AI and it'll give me a different opinion, and then go to a third one and give me a third opinion. I'm like, well, okay, which one do I do now? You know, suddenly you're making that decision, not the AI. So just one last thing about that. You know what AI? So A is artificial, right? Which means not real.
Correct.
And I is intelligence, which means smart. So AI stands for not real smart. So don't forget that when you're looking at it. Anyway, so all of this kind of brings us around to the Fed, right? Which is they've got their December 10 is when they're going to make the big interest rate decision. And what I think is really dumb about the Fed is that a week after they make their decision, the big job numbers come out. Which is like the jobs number is the one that they're looking to make sure is okay with their decision, but they're going to get the information about it a week later. Why don't they?
You feel like they could control the calendar a little bit better and say, let's just wait for one more data point. We're not in a rush here.
I guess a week later is too close to Christmas, and they want to be home for the holidays or something because they don't want to. I don't know. I don't get it. Anyhow, so we'll see what happens. Thank you, Jordan.
Of course.
Ladies and gentlemen, I hope you had more fun than a human being should be allowed to have when watching all this and listening to and talking about all this boring financial stuff. Always remember that we have our invest and protect strategy there. So if the bubble does pop, we have a great deal of confidence that our invest and protect strategy will go a long way to protect you from it. So we're not here to make you worried, just aware of what we are thinking. So again, I hope you enjoyed it. Please like and subscribe, and make sure you tune in again on Tuesday, Wednesday, and Thursday of next week for all 3 of our releases. In the meantime, thanks for watching. We'll talk soon.
Retirement Planners of America.